Hello everyone and welcome to my more important analysis and videos with me, Rich Market Analyst at Hantec Markets on Friday 19th of October. We have got an increasingly risk-off aspect to the market really. What we saw last night was a bout of selling pressure coming through the US markets. Now that drove Wall Street lower into the close. We saw the S&P 500 down over 1%, 1.4% down also. Lower, and futures had looked a little bit positive this morning, but have sort of turned lower again. So that sort of hit European markets, but also Asian markets as well. There was a degree of support that came in for Chinese equities, which were slightly higher, 2.6% actually, quite considerably higher. But that sort of came on the back of a lot of supportive comments from officials surrounding ongoing economic support for the economy, given the fact that we've seen growth figures coming in under expectations on GDP, 6.5%. That's the lowest on GDP for print for China for 10 years. Interestingly, we saw some mixed data out of the retail sales and the industrial production numbers. Retail sales for, sorry, that was the retail sales number I need to look at. Retail sales for China actually impressed a touch, 9.2%, which was ahead of expectations, but industrial production missed. So that sort of rebalancing the economy continues to show through in the data there for China, but certainly the risk appetite aspect of how the markets are taking all the sort of flurry of negative news flow certainly is playing out through equity markets today. Not so much through the forex space, whereby we're actually seeing a little bit of a rebound on sterling, given the fact that sterling has been weakening, euro has been weakening considerably in the last sort of couple of days. Sterling on the back of Brexit, euro on the back of these Italian bond yields, which continue to climb higher. You can see that this morning as the European Commission have sort of responded to the Italian budget proposals by suggesting that they're in breach of the EU rules and they're not happy about it. Certainly there's more traction in this one, and potentially further upside moves in the Italian yields, and that's going to continue to put pressure on the euro if that is the case. So I've got all this sort of laid out in my analysis videos on euro, on sterling later, but just for now, certainly the sort of headline moves on euro being lower now is not positive there. All that sort of plays out into strength in the dollar as well. Dollar index has picked up quite strongly in the last couple of days, back towards the highs of early on in October. And if treasury yields continue to trend higher, then you are likely to see that upside breakout on the dollar index. Although treasury was basically flat today, but it'll be interesting to see how those yields move. Now, further data today. Well, we've had UK budget UK borrowing figures coming out this morning, better than expected, or lower than expected, I should say, in terms of the public sector net borrowing. And then this afternoon we've got some Canadian inflation expected to be 2.7%, and existing home sales for the States expected to be 5.3 million units, which is around about a slip of 0.7% negative on the month. So, takes me to my chart today, which is the Euro Kiwi. Now, this is an interesting chart because the Euro has been under pressure, and that pressure on the Euro, but also at the same time where the Kiwi has actually been performing pretty well. And that has seen a run of what looks now 7 negative candles in a row on Euro Kiwi. That has broken back below a key level, that key level of support 74.80, which is a long-term breakout. You can see the significance of that breakout. Got hit pretty much to the pip and held back in the late September, early October period, but then we've now closed moved below that level this morning and are closed below. But look at these negative configuration on the momentum. RSI now below 40, that is multi-month lows. MACD lines set to go negative. So the selling pressure is coming through on Euro Kiwi, and 74.80 now becomes a basis of resistance overhead. Certainly, if what looks likely to be a close below 74.80 today, considering we're at 74 big figure, certainly that sort of gathers the momentum in this corrective move. And you could even see now what with a sort of a measured target of around about 350 pips or so to the downside, you're likely to see a move back towards the 71 big figure area, and that they are the lows of July, August that are likely to be tested in due course. So the momentum in this selling pressure is continuing now. You can see that also through the hourly chart, where this morning just basically a run of bear candles on the hourly. Bit stretched on the RSI, so maybe sell into strength, sell into a rebound move. You've got the resistance overhead, a little support from yesterday at 74.90, but coming in at 74.80 is that big overhead supply of the long-term sort of old breakout, which became a pivot and now is pivot resistance to the having broken it to the downside. So that's what we're looking at there. We've got this downtrend also in the last week. That downtrend suggests that again rallies are going to be sold into. So with that in mind, I wish you good luck in trading, and I'll speak to you later.